Hello, everyone. This is Josh McCarthy with LifePoint Planning. Today, we are going to be giving you an update on the Tax Cuts and Jobs Act of 2017. Figure I just make a series and keep doing updates as we get them. We just got new updates on Friday night. We'll go through that. I'm going to quickly kind of set the stage. Tax Cuts and Jobs Act is set to sunset at the end of the year. We are 234 days away from January 1st, 2026. It'll likely get resolved before then, but as we get more updates, I'll bring them. Background, if it does not get extended, which seems very unlikely at this point, but if it does not get extended, tax rates go up for most. Standard deductions get cut in half. Child tax credit gets cut in half, $2,000 to $1,000. Another point would be the estate tax exemption going down from $13,990,000 to $5 million. Yeah, champagne problems, I know, but it's an important point. And there is a number of other things with the Tax Cuts and Jobs Act. In fact, there's quite a few, but those are some of the ones that hit home the most, if you will, where people will actually see the most effects. So what happened on Friday night? So the House Ways and Means Committee released a preliminary draft on the bill for extending it. Not really a surprise. But first, what is the House Ways and Means Committee? They are the chief tax writing committee in the U.S. House of Representatives. They handle taxation, so income, corporate, estate, taxes and trade, or tariffs and trade, Social Security, Medicare, welfare programs, unemployment insurance, all of the above. Why specifically are they important? Obviously, they handle all those things, but the U.S. Constitution requires that all revenue-related bills originate in the House. So that's why they're important. And basically, what did that really say? Not really too much surprises here so far, I guess, besides the fact that they are really trying to boost some of these things. Increased standard deduction for the next 4 years and boost the child tax credit by an additional $500. So again, currently today at $2,000, but it would go up to $2,500 per kid. The estate tax exemption would also go up from 14 to 15 million. So, I mean, not much of an update. It's not really a surprise, but things are starting to move. And this is kind of the first step, if you will. And it looks like, again, not only are they trying to extend it, they're trying to do some more, which is a little bit surprising and could be concerning. And I'll quote this article that I'm pulling these numbers from. But as written, this would add roughly $6 trillion to the debt and $7 trillion if made permanent without further offsets. That would boost debt to 134% of gross domestic product by 2034, compared to 117 under current law. So, yes, taxes going down for everyone sounds great, but it can have some negative fallouts to the U.S. economy, which could be bad for everybody. Again, talk policy, not politics. That's just the way it is. But as we get more updates, I will continue to update everyone. So thank you for tuning in right now. Hope you all have a good day.